Hello again, everyone. This is Mike Paulenoff, mptrader.com, February 21st, 2010, with your weekly video chart update. All right, let's get right to it. First chart I want to explore today, or the first idea, is the relationship between gold and oil and the dollar. All right, what we see here is a daily spot gold chart on top, daily spot euro dollar versus the US dollar on the bottom. And this is a normal relationship, or it is at a distant glance. You had euro going up, gold going up. Euro going down, or in other words, the dollar getting stronger, is negative for gold. Gold underwent a serious correction from its December high at 1227 to its February 5th low at 1044. Meanwhile, the euro has been going down the entire time. Now, what is interesting about this chart is this. Let's draw some lines. Here's a trend line in gold that was broken right around this level, which is about 1100, 1095. And let's also identify the post February 5th time frame. All right, so a strange thing happened. Gold made its low on February 5th and then took off to about 1130 in the last 3 weeks. So it has been going up. Gold has been going up while the euro has been going down, while the dollar has been strengthening. A very strange relationship, but a very important one, because I have to think that gold is sending us a message, some sort of message, that there's a reason why the market wants to accumulate gold, even though the dollar is not friendly towards gold at the moment. That said, though, let's notice what happened on Friday. Let's get rid of this box. And let's notice that on Friday, the euro actually reversed to the upside after hitting a multi-month low in the morning session at 134.40. It closed at 136.13, which was above Thursday's close of 135.30. Now, I understand that the dollar index hit its high on Friday morning in reaction to the Fed discount hike. But over the course of the morning session, the dollar came off, the euro went up, because the market was looking at the discount rate hike and saying, well, just maybe this is not a major policy shift in the Federal Reserve's outlook towards the economy and inflation. That is to say that the market shouldn't be worried that the Fed is becoming less accommodative, because this is just a one-off type of situation that reflects taking back the emergency funds, or the emergency funding mechanism that was put into place to save the financial system in 2008-2009. Okay, so that aside, all I know is when I look at a chart and I see what happened recently, and in particular last Friday, I see a euro reversal against the US dollar. I see that could mean that the euro is very oversold. At the same time, I also see that gold has been consolidating at a relatively high level between 1100 and 1130 all week last week, and it's above the break above the trend line that occurred on February 16th. Now, gold looks to me by itself, it had an up leg, and it's consolidating, and it's about to take off again. Now, the likelihood that gold will take off is enhanced by the fact that the euro may be turning up for a relief rally. Now, what would cause a relief rally? Well, just off the top of my head, I've been reading that the Greeks are coming to the market with a bond auction next week, and it'll be a litmus test to see if that auction can be sold, that bond can be sold, and if there's demand for the bond, as if there's any confidence at all in the Greek fiscal monetary situation and in the Greek government itself. Now, based on this chart and the way the euro looks, and because the euro is so oversold, and one reason we can see that it's oversold is how its relative strength or momentum indicator is acting. Look at how many new lows the euro made in the last month or so, where momentum made a higher low. So I have indications here that the euro is about to embark on a pretty sharp recovery rally. And if that's the case, then the news that will accompany that could be that the Greek bond was the demand for Greek bonds was greater than expected, or some issue where the Greek austerity measures are being accepted more by the Greek people so they can get their fiscal house in order, or alternatively that Europe will come to the aid of Greece, but that Greece has also made some sacrifices. Whatever the news stories are, it looks like the euro is ripe for a rally, a recovery rally, and that recovery rally could get to 140. Now, if we're trading at 136, then we're talking about a rally of 3%. Gold, well, one thing's for sure is that it will not be a depressant for gold if the euro rallies 3%. So gold could end up moving much closer to its December high above 1200. So this is something that we have to look at in terms of the relationship here and what could be the motivating factors. Technically, I have a setup here that's very interesting, and it bodes extremely well for gold. As far as the euro goes, I don't want to be long euros right here. I think this is a significant downtrend, and that there are issues behind the Greek situation that probably will preclude the euro from going into a bull move anytime soon. If anything, it will go into a sideways stabilization pattern, and then I think it could roll over again. But right now, I think it's ripe for an up move. One more thing about this chart that's interesting. Let's put the moving averages on the gold side of the equation. All right. So I'll do that right now. Where is my? There are the moving averages right there. Okay. So you see what's going on here. Normally, when the euro gets hit so hard that it drops below its 200-day exponential, its 50-day exponential, and its 20-day exponential, usually gold will look the same way. But look at this. Gold on February 5th hit a low right at its rising 200-day exponential and didn't break it, rallied from it, and is now consolidating above both its 20 and its 50. This is so different than the euro. So different. And you would think that gold would be much lower. In fact, I thought that when gold got down here, it would keep going and follow the euro, but it did not. So the market, we can't disagree with the market. The market has the wisdom. It has the total consciousness of the trading environment in the community. So I believe what this chart's telling me. Something's going on in gold that could be extremely positive, and something's going on in the euro that could stabilize it for a while, which would be very positive for gold.